referring to me that I do a lot of overtime.
Single nurses, they definitely do.
Hello guys, welcome back to my channel. This is your girl Nurse Momo. In today's session, I have a very lovely gentleman. His name is Yella, whom I've equally benefited so much whilst I was in Ghana. I used to watch his videos so many times, and I just wanted to understand so many things in Ireland. He has his own YouTube channel, and today he's going to take us through taxation in Ireland. Thank you so much for joining me today.
It's my pleasure to be here talking to you, Lucy, on your channel, Nuts Momo, on taxation and the payslips. Very happy, so that I can also expand and, help few other people apart from my own subscribers. Happy to be here.
It's a pleasure. It's a pleasure. Can you tell us a little about yourself?
Yeah, my name is Ella. Again, I run a channel called All About Ireland. Been busy with my baby, but I'll introduce about myself professionally. I came to Ireland in 2017 to study Masters in Business Administration from Trinity College Dublin. I've been working
Wow.
since then, since I graduated from Trinity College. I am primarily into IT, program management and project management, but it's my interest to help people related on aspects related to taxation, immigration, housing, whatnot, the usual chores that we go through in Ireland. And when we are starting to build or building our life in Ireland, being immigrants in this country. But my videos also help people who are from Ireland, mostly the Irish, because it's very common for all of us to go through those aspects in our life, that is taxation, pay
Yeah.
slips, finances, mortgages, car, things like that. And I'm here with Lucy from Nurse Momo to talk about
Yes.
primarily 2023 taxation and the pay slips that you get in Ireland. The thing is with pay slips, sometimes they keep changing,
Yeah.
but you'll understand once we go further.
Grand. Grand.
Lucy, what
So
else?
let's go right into it. I'm going to add our presentation so that Yella takes us through
Yeah,
the taxation system in Ireland.
yeah. Thank you, Lucy.
So Yella, please.
Again,
Yeah.
the main agenda for this YouTube video on Nurse Momo is, to help you understand how much money you will get, because the taxation differs from country to country.
Yeah.
Right? In Ireland, it follows a taxation system called pay as you go, pay as you earn, and it has different levels of taxation. And one of the things is you need to understand the taxation to understand how much money you will be left with. We are not talking about budgeting and costing, which comes later once you have salary in your hand, but we'll be talking about the percentage of taxes that are usually applied. Now,
Okay.
the percent of taxes differs from person to person, given that if I'm married, I have a different taxation system. If I'm single, it's a different taxation system. I'll go with two examples. One,
Okay.
a single person, the other one is a married couple. Usually, there are two rates in Ireland:
Yeah.
a standard rate, which is 20%,
Yeah.
and uh, the non-standard rate, which is 40%. So the two levels,
Yes.
20% and 40%. On top of that, you also have something called PRSI and USC. USC is Universal Social Charge, which was introduced after recession. And then you have PRSI, which is pay-related social insurance. This
Yeah.
amount is gathered, and you get state pension once you are 65. And
Wow.
PRSI contributions also help you to get maternity benefit, parents benefit, paternity benefit, and things around social welfare benefit. You need to do you need to contribute a certain number of weeks of contributions of PRSI to avail those benefits. So it's
Okay.
basically, again, pay related social insurance. It's a social insurance. If something happens in your life where you're not
You
going to
can
get
fall on
any
that.
pay, yeah, from full-time
Okay.
job, that
Yeah.
that money is used to help you out. And you find a lot of,
Yes.
I availed paternity benefit of 2 weeks, parents benefit of 2 weeks. My wife availed maternity benefit of 6 months. These come through PRSA contributions as well as some of the company policies, but mostly PRSA contributions. Now, coming back
Okay.
to the standard rate, in 2023, the 20% taxation is applied on incomes up to 40K. When I say up to
Okay.
0 to 40K, it's 20%. For example, if your
Okay.
salary is 40K, you'll be paying 20% of 40K, 8K in taxes.
Wow.
Okay. uh, but there are few things called credits which we'll talk about later. So
Okay.
8K is a payee tax that you
Okay.
usually see on payslips and other places. And anything
Mm-hmm.
above 40K, it's taxed 40%. For
Okay.
example, if your salary is 50K,
Mm-hmm.
up to 40%, it's 20%. So 8,000 in taxes. And the
Yeah.
difference between 40K to 50K, which is 10K, you are taxed at 40%, which is 4,000.
Yeah.
So the total tax is 12,000. 8,000 till 4,000, 40,000, 40,000 to 50,000, it's 4K. 8K plus
Yes.
4K, it's 12K.
Okay.
So
So
when
if I
you observe,
understand you, if I
yeah,
understand you correctly, if your annual salary is up to 40,000, yeah, you pay a payee of 20% on that.
yeah,
And
yeah,
anything above 40,000, you are being that which is the balance is being taxed at 40%.
yes.
Okay, grand.
Yeah. So the way simple calculation, mental calculation is for every 10,000 euros till 40,000, you pay 2,000 in taxes. For every
Yeah.
10,000 increase in salary after 40K, you pay 4,000 in taxes.
Okay.
So the more salary you get,
Yeah. The
the
more
most
tax
tax you pay,
you pay.
and the less
Grand.
is in your hand. So some people make decisions based on this. For example, I mean, if you add up US and PRSI, you actually pay over 50%. And some
Yeah.
people think it doesn't make sense for them to work for more salary. Let me just stay at this level where I'm getting this salary. I can give time to my family, kids, and all. So some people decide not to earn more salary too, because for every 10,000, as I said, you'll be paying 4,000 just in pay taxes. Now,
Wow.
if you're a married couple,
Okay. Yeah.
you can add together. Like you can add your 40K and your spouse's 40K, and that becomes 80K,
Okay. Wow.
right? So
Yeah.
20% on 80K. So
For
you have
married
this
couple.
benefit from, yeah, you have this benefit from 40K to 80K to save taxes, and you can share,
Okay.
right? When I say you can
Yes.
share, if you, let's say my wife gets 30K, I get 50K.
Yes.
Instead of paying 40% tax from 40K to 50K, I can take my wife's 10K and we can
Okay.
file jointly. So I'll be paying
Okay.
20% on 80K rather than uh, 30K, 20% on 30K of my wife's salary, 20% on 40K of my salary, and 40% on my salary, which is above 40K. So I'll be saving 2,000 euros in taxes if
Okay.
I jointly file.
Okay.
So
So
a
if
lot
you
of
join
couples
with your
also,
spouse, you make
yes,
more. It's beneficial.
yes,
Okay. Okay.
yes. And if you join with your spouse, you can also exchange few credits. I'll talk about that when I'm talking about credits later. But if
Okay.
you're a married couple and one of the couple earns less than 40K, I would advise you to go and file jointly. And
Jointly.
the way to do that is you need to fill a form called accessible spouse election form, and you need to submit it to revenue through revenue.ia.
Wow.
That way
Okay.
you save some more money and you get some more money in hand.
Okay. So I can see from your presentation that for the married couple section, as we can all see, it
Yeah.
stated that 49,000 euros per annum at 20%,
For
and then
that,
an
so
increase of 31,000 maximum
yeah,
at okay, at also 20%, and then
yeah,
anything above this is going to be 40%. So the
yes,
49 and then the 31 is going to be 80,000 per annum.
80,000 exactly.
Okay.
But if
So
one of the
one
couple
spouse
is
is
not,
giving 49.
yes,
Okay.
if one is not working, let's say if my wife is not working, I
Yeah.
the 40K limit goes to 49K.
Okay. Yes. I can see that here.
Yeah,
Okay.
that's the only difference. So
Okay.
even there, if your spouse is not working, you still don't pay 40% over 40. You pay 40% over 49K. And if you
Okay.
observe the trend from 2019 to 2023, the numbers
Yeah.
have been increasing. It went from 35,300 for
Yeah.
20% to 40,000 now. Because of cost of
Yes.
living, even in future, I think it will go to 40, 45. So there'll be more money in hand. But if you're
Yes.
not good with money management, you spend more and it's waste of money. If you have a saving mentality, the increase in the standard rate is good for you, so that you'll have more
Yes.
money in hand and you can do more worthwhile things and invest in property.
Okay. Okay. That's cool. That's cool.
Yeah,
Thank you. Thank you. And if you're a
yeah, that's
single
the
person, I can see
yeah.
single or widowed or
So
surviving
without
single partner.
yeah, yeah. Again, there
Okay.
are other varieties there, which again, by looking at it, you can easily understand. I
Yes.
went to two
Yes.
examples because it's easy. Those are the most 90% of them would be that. Like if you're widowed, instead of 40K, you pay 44K.
Okay.
If you have
Okay.
children, okay,
If you have
okay,
children.
yeah.
So, okay. For the sake of my viewers, I'll just try and mention some things just to make sure that they really understand what we are trying to discuss here. So, from your presentation that you've shown me. So, if you're a single person, for an annual income of 40,000 euros per annum, you pay 20%. So, anything above this is charged at 40%. If you're a married couple and just one person is working, you have
Yeah,
49,000 at 20% and the balance at 40. That's
yeah,
wonderful.
anything above
And then for
49.
married
Yeah,
couple, it's 80,000 at 20%.
yeah,
That's
yeah.
right. Thank you very much. Okay, it's
So
well understood.
if you want to move on to the next one, I want to talk
Yeah.
about two things. It's called PRSI and USC. As I said,
Okay.
PRSI stands for Pay Related Social Insurance. USC stands
Yeah.
for Universal Social Charge. Um, Now for PRSI, it's standard 4%. Let's say your salary is 10,000, 40 euros from 10,000. Yeah, for 400. Sorry, 400 euros from 10,000 is charged as PRSI,
Okay.
irrespective of your salary. Let's say you're earning only 1,000 euros a year. 4% of 1,000 euros, which is 40 euros, is charged towards
Okay.
PRSI.
Oh wow.
Yeah. So
Okay.
basically, the 40,000, 20%, 40,000, 40% above 40,000 is basically 24% up to 40,000 and
Yeah.
44% above 40,000.
Okay.
It's just that that is a income tax, which is pay tax. This is for your pension in future.
This is for your pension.
It's like if you ask me, you think this as a pension contribution, though it's not pension contribution, but you get this state pension. Now
Okay.
the other charge is USC. USC is again like
USG.
payee. It's progressive. There's no USC
Okay.
under 13,000 salary per annum, but if you earn more than 13,000,
Okay.
you can see the table there. For first 12,012
Yes.
euros, it's 0.5%.
Okay.
For
Yeah.
next, from 12,012 to 22,920, it's 2%. Just the amount between that.
It's 2%.
Yeah. And the next 47,124 is charged at 4.5%. And above that, it's
Okay.
8%. If you actually add them
Above
up,
that is
yeah, if you actually add them
okay.
up, it comes close to 70,044 euros. Okay.
Okay.
If you earn more
Yes.
than 70,044 euros as a single person, you pay
Okay.
anything above 70,044 euros, you pay 40% towards payee, 8% towards USC, 4% towards PRSI. So you basically pay 52% in taxes
Wow.
on every euro you earn over 70,044 euros.
Wow.
Yeah.
Okay.
So you'll be losing more money as you earn more
Yeah.
money.
Yeah. You lose more money as you earn more money.
Yeah.
Wow. Wow.
So PRSI
Okay.
is standard 4%. If you earn
PRSI is
one
standard.
euro,
PRSI is
you
standard.
you pay four pences. USC, if your salary is less than 13,000, you don't pay any USC. If it's more than 13,000, you follow the table and basically the calculation is very simple, just like the standard rates. Um, 0.5% of 12,000 is charged as USC till 12,012. For the amount between 12,000 and 20, I mean 20,000 920, 22,920, 2%.
Mm-hmm.
For example, it will be 2% of 10,908.
Okay.
It will if let's say you're 100, you're running 100,000. Let's just go with the example. So your USC will be 0.5% into 12,012 euros plus 2% into 10,908 plus
Okay.
4.5% into 47,124 plus 8% into the remaining 100 minus 70,044 euros, which let's go with 30,000. So you add them
Okay.
up, and that much
That's
is
going
what
to
you
be
pay. Yeah, USC. If you're paying more
okay.
than that, you get tax returns while filing
Okay.
tax.
Okay. Okay.
It
That's
does
well
happen
understood.
sometimes. You change your job, uh, like emergency tax, the first month you pay emergency tax, right? It either
Yeah.
comes off in the next pay slips or it will come off during tax returns.
Okay. Thank you.
Yeah, that's about PRS and USC. Hope that's clear enough. Yeah.
Yeah.
The next thing is credits. As I said earlier, you pay 20%, 40% taxes based on wage or salary lays.
Yes.
You also get something called tax credits,
Tax credits.
which is like you subtract this money from tax, and that's the income tax that you calculated. That's the actual tax you should pay to the government. Let's say the
Okay.
pay your salary is 50,000, you are supposed to pay 12,000 in taxes. You get few
Mm-hmm.
credits, you subtract those credits from the 12,000, you whatever amount that's remaining, that's the amount you have to pay to the government. The government collects before,
Okay.
but uh, that's how it calculates. For example, if you're a single person, you get
Yeah.
a employee credit which is 17,775. You get a personal credit which is 1,775. So you basically, as a single
Okay.
person, you are entitled for that 3,550, just like that.
Yes. Yes.
So 3,550 is a tax credit. The
Okay.
that's basically an addition of, if you see the single person on the left side table, 1775, and you also see employee payee tax credit, the third box on the right bottom, which is 1775. You add them up, that's for
Yes.
every person who is working in Ireland.
Oh,
If
wow.
Yeah, if you're not working, you get 1775, which is personal credit.
Okay.
But again, if you're not, that can only be used by your spouse. If you're not married, you're not working, you're a single person not working, then you're not paying any income tax altogether, right? So it doesn't matter which credit it
Okay.
is.
Yes.
Now again,
Yes.
there are few things there about married person. uh, Married person with no wife working, you get 3,550. If it is widowed person, 1775, no kids. If they have a kid, you get 2,315. If the bereavement year would be
Okay.
the first year. So in first year, the widowed person gets more credit, 3,350, 3,550, just in the first year. But next year on,
Okay.
it will move on to 1775 or 2,315 based on if they have any dependent children or they don't have any dependent children.
Okay. Okay.
Okay. And on the right, if you see single
So,
person child care credit, uh, if the single parent is raising the kid, they get 1650. If your age is over 65, you get 255, 245. Again, if both are
okay.
raised, then 490. If you have a kid at home, but you are married, you get 700,
Yes.
which is home carriage tax credit. Employee tax credit,
Okay.
as I said, every employee gets it. And income tax credit is
Yeah.
basically for businesses. I mean,
Yes.
solo traders, they get that money. Incapacitated child tax credit is 3,300. It's basically a child who has artistic, is physically handicapped. If you have a kid who can't live on their own, then you get extra credit of
Okay.
3,300. Yeah. And
Okay.
dependent
Okay.
relative, let's
So
say you
basically,
have a,
the
yes, sir.
sorry. So basically, the
Yeah,
tax credits. What you're saying is that it reduces the amount of tax that you are supposed to pay.
yeah, it reduces the amount of tax that you are supposed to pay.
Reduce the tax. Okay.
Yeah. So for
Okay.
example, you have to pay 12,000, and look at these credits that are applicable, add them up, you subtract it from
Yeah.
12,000, and that's the
From
income tax you need
your
to pay.
tax.
Yeah. As a
Okay.
standard,
Okay. That makes sense.
every person will
Yes, I
get
understand it.
3,550, 3,550,
Okay.
and the rest you need to apply during tax filing.
Okay. So does it mean that with the tax credits, it's per annum or per month? I can see for a single person, 1,775 is for a single person,
Per annum.
and the person is also entitled to employee 1,775, which makes
Yeah.
3,550. So that is per
Yeah.
annum for a single person. Okay.
Yes. And usually what the companies do is they divide it by 12, and in every month's payslip, they remove that amount. I'll show you that once we move on to the next slide. But again,
Yeah.
basically, you need to understand tax credits are the amount that need to be
Yes.
reduced from the taxes, and tax rate change based on the person's, like Lucy's situation would be very different from my situation. Lucy is a single person, so she can't use multiple tax credits. I can use multiple tax credits because I have married, I have a kid. So based
Yes.
on individual person situation, the tax credit get applied.
Wow. Wow.
Yeah.
Okay. Okay. So I just want to add something here. I can see incapacitated child tax credit, which is
Yeah.
taxed at 3,300. So if you
Yeah.
have any child like who falls in this category, that means you are going to get this tax credit waived off your tax.
Yes.
Okay. Okay. That makes sense. Yeah, I understand that perfectly. Understand perfectly. Okay.
And then let's move on to, yes, the final but
Yeah.
very important one is the pay slip.
Is
On
a
the pay
pay
slip,
slip.
yeah, you'll find the salary, the first one on the left under description. Salary is
Yeah.
basically your annual basic salary divided by 12.
Okay.
Okay. And a lot of people, especially nurses, they do overtime. So the overtime income comes under a different category.
Yeah, are you referring to me that I do a lot of overtime?
Single nurses, they definitely do. The BIK Med is basically benefit in kind. BIK stands for benefit in kind. Med is basically medical insurance.
Medical
At
expense.
all,
Okay.
yeah. Some most
Okay.
companies, private companies, they offer that, so that
Oh
value gets
wow.
added, and that will be
Oh.
your monthly income. And based on overtime, it keeps changing every month. On the right, you can see payee. This period would
Yeah.
be that particular month. Balance would be how much you paid till that period. For example, in January payslip, the payee in balance and this period would be same, but in March, the balance would add up 3 months payee that you paid, and this period would be the period of, I mean, just the March, how much ever you're paying. You can also see PRSI,
Okay.
which is 4% of
Yeah.
the
PRSI.
salary. Yeah, overtime
It's four
money.
percent of the salary.
Yeah, it is also applied on overtime. If you work overtime, you pay 4% on overtime too. If you
So
receive a
4%
bonus,
of what we have here as gross pay.
yes, yes.
Okay.
Even the pension, if you have bonus and all from the company, even that you pay 4% on that. You pay USC on
Oh,
that too. So
you pay. You pay. Yeah. Even
any
on your
income you're getting,
pension
yes, in future, I mean, when you are old,
in
you pay it on
future.
pension
Yes.
too. Yeah, yeah.
Okay.
Again, the limits to that, we can talk about that later. You see, pension, AWC, that is your
Yes.
pension contribution. Like
Your
companies
country
also
pension.
run
Okay.
occupational pensions, which are private pensions. You can contribute to that. And ABC stands for voluntary contribution, additional voluntary contribution. EE pension is
Okay.
the pension contribution that you make.
You pay tax on this.
What?
You
Sorry.
pay tax on your pension contribution.
No, no. Your pension contributions
Okay.
save your taxes.
Oh wow, that's
So
good.
if let's say your gross salary is 100K, you can, based on age, if you're above 30, you can contribute 20% towards pension. So 100K, you pay 20% towards your pension. You get taxed only on 80K. You don't get taxed on 100K.
Oh, that's good to know. That's good to
Yeah.
know.
So for every euro you invest, you save for for 40 cents.
Oh,
So that's
so
the reason in my
the
videos.
more pension you pay, the less tax you pay.
Yes, there's a video on mine around pensions. If you watch it, you can see the benefits of paying pension, because
Pension.
whatever pension you pay, it goes into equity market, and equity market is growing at 10%. So it's quicker way to retire faster. And most of the occupational
Yeah.
pensions have 50% 50 as age of early retirement, and I want to retire at 50, so I contribute a lot towards my pension.
Okay.
So if
Okay.
you plan to retire early, that's the way to do it, and you can
That's the
save
way to do
taxes.
it.
Yeah.
Okay.
And on the right,
Okay.
if you see, there's a gross pay, which is addition of the values. Total deductions
Yeah.
is addition of values like payee, PRSA, USC, pension contributions.
Yeah.
Non-tax adjustments is basically benefit in kind. Benefit in kind is given by your company as insurance. So that's a non-tax adjustment that needs to be subtracted. That don't get taxed.
Those that don't get
You-
taxed.
Yeah. So and
Okay.
then you have net pay, which is the addition of those values.
Okay. Okay.
Yeah, that's your
I,
monthly slip. But on the bottom, you can also see cumulative details, which is like over 3 months what happened. You can
yes.
see tax PRSI details and other further commentary. But the bottom one is basically for over the year, over the 3 months, over the 6 months, what's happening. It tells you the complete information. whereas the above is basically your monthly payslip.
Okay. So this is cumulative over the 3 months. And
Yes,
then,
you don't see the
okay.
differences, but in your payslips, if you see March payslip, you will see the actual differences. April payslips also be generated now, so you can see how they show the cumulative details.
Okay, thank you very much. Because I usually get confused with this cumulative details. I'm like, what are they saying over here? Because I don't really understand. So I now understand that it's your cumulative for like 3 months,
Three
and
months,
then
yeah.
everything displays over here is your taxes for the month.
Yeah, in the May payslip, it will be 5 months. In June payslip, 6 months. In August payslip, 7 months.
Okay, okay. I can see the net pay over here.
Yeah,
Okay, that's good. That's good.
yeah,
Wow. Yeah.
that's it. That's how you calculate your tax, look at payslip, and make judgments. But a
Okay.
key takeaways, few credits there. The pension contribution helping you with the tax, I mean, reducing taxes, and yeah, 30,000 USC calculations PRSI. So pension, state pension being contributed to your contributions. Yeah, that would be key takeaways from my end.
Okay, it's very, very helpful because it's sometimes it's very difficult understanding your pay slip. How much am I paying for PRSI? How did they really calculate it? It's very difficult understanding the payee system and also the USG system. So I was always trying to read online, trying to do my own calculations, and then sometimes it doesn't even add up. Okay, with what I see on my pay slip, because you think, oh, I understand it. Let me try and then work it out. Then you don't really understand it. So that has really given me a very good understanding. And I think for me, I even have children, planning on bringing my husband, planning on bringing my kids and all that. So I now know the benefits of having your children around when it comes to taxation. I also know the benefits of having your husband around because I know that
Yeah,
it's very good to now pay together with your spouse, because then you get to pay less tax as well, which has
yeah,
been very, very, very helpful. What are some of the benefits of paying the PRSI?
yeah. The benefits again, social welfare benefits. You get that. You get paternity benefit, maternity benefit, parents leave. You also get a pension from the government once you cross 65, and there's a illness benefit,
Wow.
job seeker benefit, rent supplement. These all get paid from PRSI. You need to have certain weeks of contribution towards that. The number of contributions you make, the more money you get when you get old.
Okay, with all these benefits, do you have to pay PRSI for a specific number of months, or let's say for a year, before you are
Yes,
entitled to these benefits?
yes. So earlier the rule was if a person pays PRSI for 10 years, he's eligible to get full state pension. But now they made it to 40 years. Let's say you are a
40 years.
homemaker. Yeah, if you are a homemaker, you left job for kids and all, then you get benefits like they skip a few years. So there are few rules around that. It takes another video to talk about it, but yeah, definitely the number of weeks of contribution definitely have an impact on the amounts and all. Like some people, they come in the first year, they don't work, they earn less salary or have less contributions, so they lose job. Then they can't apply for job seeker benefit because job seeker benefit asks for almost close to 3 years of PRSA contributions.
Oh, wow, wow. So with the job seekers benefits, you have to contribute to PRSI for almost 3 years before you
Yeah,
can
yeah,
apply for job
yeah,
seekers benefits. In an
yeah,
instance where you are unemployed at a particular stage, then you can now
yes,
apply for the job seekers benefits.
yes,
Okay,
yes,
okay, that's good. Um, with when it comes to, I know that you were really up for the pension payment. I wanted to ask you, what if as an overseas nurse, I always talk for my nurses. They are in Ireland and maybe they have plans of traveling to other countries. They don't have plans on staying in Ireland for a very long time. Would you
yeah,
still advise them to still go ahead and pay pension? And how would they be
yes.
able to reclaim this if they want to move out?
So again, UK has something called QROPS pension funds, which are overseas funds where you can transfer the funds from that pension scheme to other countries. In Ireland, it's not there. You can only move from Ireland to Europe or UK. You can't move outside those jurisdictions. But if you're
Okay.
contributing and if you want to move back to your country, let the pension fund be like that till 50 years. As I said, early retirement age is 50. At 50, they can, based on the amount, they can completely take it if it is under 200K and pay no tax. Or if the amount is more than 200K, you can also have something called ARF, Annual Retirement Fund.
Okay.
annuity retirement fund, sorry, not annual, annuity, where you get monthly salary.
Okay. Okay.
Yeah, and
So
you can,
this is a very good news. From what
yeah,
you are saying, if you want to leave Ireland to any part of Europe, you can transfer your pension contribution paid so far. So it's either
yeah,
Europe or UK.
yeah. Even the state pension,
Wow.
even if you're in your home country, you get paid based on the number of PRSI contributions that you're making.
Okay.
The only thing is
So
you need to maintain your bank account
yeah, please
in
go
Ireland.
ahead. You need to maintain your bank account. Okay, okay. So does it mean that I have to pay if I choose to live here to my home country, unless I've paid, let's say, contributions for a particular number of months or years before I can get a benefit?
Yes,
If I don't wish to transfer it to Europe or UK and I want to go back to my home country, do I still get benefits after 50 years?
yes. And the earliest is 50 years.
Okay,
Like there'll be people who said, okay, I'm working now, I'll take at 65. The pension fund keeps growing, right? Because they're invested in equity. It follows the market. So you can also have bond pension fund, cash pension fund, depends upon your risk factors. But yeah, the more you keep, the more you get. As simple as that.
okay. Yeah. The more you give, the more you get.
The more you give, you save more tax. The more years you give, the more money it will be in the fund. The more time you keep it in the fund, the more it grows. Like your money makes money, and at the end of the day,
Yeah.
you are rich.
Oh,
You
that's
can die rich.
And then there's a question I really want to ask. When it comes to taxation, how important is paying your tax to securing a mortgage? I know we are not talking about mortgage here today, but like just to touch on it a little, then later we'll have a video mainly on mortgage.
Yeah. See, the
How do
mortgage,
they relate?
mortgage. When you're applying for mortgage, they ask for pay slips. They ask for contract. They also ask for your statement of liabilities,
Okay.
and they also ask for your rent and all. To see how much you're saving. They do a stress test. Let's say if the interest rate is 3%, they do a stress test at 7%, to see, okay, if the interest rate scenario changes, will the person still be able to pay the EMI that needs to be paid? So there'll be multiple calculations. So I think that's the other video that we were talking about that we have to bring on
Yes,
it. So
yes,
we
yes.
can,
I'll leave it here today. I'll leave
yeah,
it here today.
yeah, but it's very important.
This,
Yeah,
yes, this has been so fruitful. Yes, viewers, I hope that you've all really understood perfectly the taxation system in Ireland. Thank you so much, Yela, for coming on this show to really explain everything about taxation. I'm actually going to leave the link to Yela's YouTube channel under my description. I'm also going to tag him so you can go to his channel. You can read more about all that he does. He's an expert in this, and you are going to have the right information. I started following way back in Ghana, and I never regretted it. So when it came to taxation, I knew the right person to contact because you've really earned it, Yela, and I'm really, really proud of you. Thank you so much
yeah.
for coming, and I
Thank
hope
you,
to
Lucy.
see you soon on the next video
Yeah,
that we're talking about.
yeah. Cheers.
Thank you so much,
Bye.
viewers. See you all soon on my next video.